You use money every single day, and yet nobody ever really sat you down and explained the whole system, did they? You get paid, it goes into a bank, banks do something mysterious with it, governments print money, rich people talk about the markets, and somewhere in there, skyscrapers get built and people retire at 65. And you're just thinking, okay, but how does this whole thing actually work together? In the next 10 minutes, I'm going to explain the entire financial system like you're 5. Not because you're dumb, but because everyone else explains it like you're doing a PhD. We're going to cover where money starts, where it flows, how it gets multiplied, and how all these big, scary institutions are basically just pipes in one giant money machine. By the end, you'll understand the basic mechanism better than 90% of adults who, their way through money conversations. Let's break the whole thing open. So, what is the financial system in baby language? Simple version. The financial system is the network that moves money from people who have it to people who need it, so the world can build things, buy things, and plan for the future. Why does this exist? Because in the real world, money is lumpy. Some people and companies have extra money they don't need right now. Other people and companies don't have enough, but they have ideas. Build a house, open a store, expand a factory. If everyone kept their cash under their mattress, nothing big would ever happen. No bridges, no apartment complexes, no giant phone companies, no retirement savings that grow over time. So humans built a system, banks to store and lend money, markets to buy and sell pieces of companies and debts, funds to pool people's savings, insurers to protect against bad luck, and central banks to act like the referee and the money DJ. Over time, that simple idea, move extra money to where it's needed, turned into this huge web of institutions with fancy names. But under all the jargon, the basic game is still the same. Take money from people who have it now, give it to people who can use it, hopefully grow the pie for everyone. Now let's meet the main characters in this story and see how they actually do that. We'll keep this simple and hit the 5 big players: central bank, the money DJ, commercial banks, the everyday money pipes, markets, where big deals happen, funds, giant money pools, insurance, the risk sponge. Every country has a central bank. In the US, it's the Federal Reserve. In the UK, it's the Bank of England, etc. Think of them as the DJ of the economy. They decide how loud or quiet the money music plays. They mainly control 2 things: how much money exists in the system and how cheap or expensive it is to borrow that money, interest rates. When the economy is sleepy, people aren't buying, businesses aren't hiring, the central bank turns the music up. They lower interest rates, so borrowing gets cheaper. They add money to the system through things like buying government bonds. Result? More loans, more building, more hiring, more spending. When the economy is too hyper and prices are rising fast, inflation, they do the opposite. Raise interest rates so loans get more expensive, pull money back from the system. They're not perfect, but they're basically the puppet master of how easy or hard it is to get money. Now to the part you actually touch: commercial banks. These are your normal banks: Chase, HSBC, whatever your local big bank is. What do? Simple. They take money from savers, they lend money to borrowers, and they keep a cut in the middle. Think of them as giant money pipes. You deposit your paycheck, the bank promises to give it back when you want. Meanwhile, they lend most of it as mortgages, business loans, credit cards, car loans. Here's the wild part most people don't realize. When a bank gives someone a loan, it doesn't always grab that exact money from another person's deposit. It often creates new money in the process by typing numbers into an account. That's why we say banks help create money, not by printing cash, but by creating new deposits when they lend. They also offer you cards and payment systems, so money moves quickly, safety, so your money isn't under your pillow, and some interest, in theory, a tiny bit. Banks are the beating heart of day-to-day money movement. Next level up, financial markets. Instead of going to a bank for a loan, big companies and governments often go to markets. Stock market, companies sell little pieces of ownership called shares. Bond market, governments or companies sell IOUs called bonds. Basically, lend us money, we'll pay you back with interest. Investors, people, banks, and funds buy these. Why? because they want their money to grow over time, not sit still. So markets are a place to raise huge amounts of money, a place for savers to shop for ways to grow their savings. Instead of you personally lending $1,000 to a company, you buy $1,000 of stock or bonds. You can then sell it later in the market if you need your cash back. Now imagine you and millions of other people all throwing money into one huge pot. That pot is a fund. Big types: pension funds, save for retirement; mutual funds or index funds, regular people investing together; sovereign wealth funds, countries investing their extra money. Their job is to take a huge pile of money and spread it around into many different investments: stocks, bonds, property. Example: you put $200 into your retirement plan every month. Alone, that's not much, but combined with millions of other people, that becomes billions. Then that giant pool invests all over the economy, buying shares of companies, lending through bonds, buying buildings and infrastructure. These funds are some of the biggest owners of everything: airports, shopping centers, office buildings, big companies. So when you hear Wall Street owns everything, a lot of that is really people's retirement money pooled together. Life is risky. Houses burn down, people get sick, cars crash. Insurance companies exist to spread that risk. Everyone pays a small amount regularly, a premium, into the pot. When something bad happens to a few people, the pot pays them a large amount. The trick is most bad things don't happen to most people most of the time. So insurance companies usually sit on huge piles of money, and they invest that money too. So again, your car insurance payment doesn't just sit there. It quietly gets pushed into the larger financial system, funding bonds, companies, and more. So let's put this together in one story. You work a job, you get paid. Your bank uses your deposit to help fund someone else's mortgage or business loan. Maybe issues them a credit card too. Your employer might have raised money years ago in the stock market, might borrow now and then by selling bonds. You put money into a pension fund or retirement account, or into a mutual fund or index fund. Those funds take your savings and invest them in companies, bonds, and real estate, which helps build offices, factories, stores. You pay insurance on your car, health, maybe your home. Insurance company invests those premiums into the same markets. Every time you get a paycheck, tap your card, pay your rent, contribute to retirement, pay an insurance bill, you're feeding this giant machine that decides who gets money, funds what gets built, influences who becomes rich and who doesn't. Not understanding this doesn't stop it from affecting you. It just means you're playing a game without knowing the rules. Let's zoom out. The financial system is not magic, not just evil rich people, and definitely not a random mess. It's a giant network that moves money from savers to borrowers, tries to spread risk, and helps people and businesses plan over time. Does it sometimes blow up? Yes. Bad loans, bubbles, scams, those happen when the system is pushed too hard or rules are weak. Myth: the financial system is just a casino. Reality: parts of it are very casino-like, but a huge part is basic plumbing that keeps the economy running. Mortgages, business loans, retirement savings, insurance. You can't opt out of the plumbing. You're already in it. Let's recap what you now know. Financial system is network that moves money from people with extra to people who need it. Central bank is the DJ, turning money up or down, changing interest rates. Commercial banks are the pipes, taking deposits and making loans, even creating new money. Markets like stocks and bonds let companies and governments raise huge sums directly. Funds like pensions and mutual funds pool everyone's savings and become massive investors. Insurance spreads risk and quietly funnels money back into the system. Is there more complexity? Absolutely. There are hedge funds, private equity, derivatives, and a lot of spicy stuff. But you now understand the core machine, the logic behind it, the skeleton that everything else hangs on. You officially understand how the financial system works better than most people who complain about it at parties. If you made it this far, you clearly care about actually understanding money instead of just pretending. This is what I do every week. Take some intimidating system, credit cards, inflation, the stock market, and explain it in plain English with no BS. So if you like the feeling of, oh, now that finally makes sense, hit subscribe. Or don't, but then next time someone mentions interest rates, you'll be back to nodding and faking it. Next time someone says the financial system is broken or the Fed is printing money, you'll actually know what they're talking about. If you've got questions, drop them in the comments. I read them. And if you want to go deeper, watch the video on how banks create money next. That's where things get really fun. Stay curious, stay smart, and stop pretending you understand things you don't. Now you actually do.